The global stock markets are being hammered right now. The S&P 500 is down 4.6% just in Q1 alone. Oil has hit $111 a barrel after Iran have closed the Strait of Hormuz. Trillions have wiped off the global market. And the question landing in my inbox every single day is Dubai property safe right now, or should I be worried? I'm going to give you my honest answer, and this is just data. This is not a sales pitch. Now let's be clear about what's actually happening in the global markets right now, because context does matter. The S&P 500 ended Q1 2026 and it was down 4.6%. That's on top of the ongoing tariff because of the uncertainty. A war in Iran that nobody predicted, and oil prices that went from $67 to over $111 per barrel in a matter of days when the Strait of Hormuz was closed. Now for context, the Strait handles roughly 20% of the global petroleum exports. When it closes, energy markets panic, and when energy markets panic, everything else follows. Investors right now are doing what investors always do in this situation. They're asking one question: where do I move my money? Cash, gold, hard assets, and increasingly they're asking about the Dubai property market. So let's look at what the Dubai property market has actually done while all of this has been happening. Here is Q1 2026 data pulled from the Harbour Real Estate Market Report that was released earlier this week, the most current data available. In January 2026, 72.5 billion dirham in property transactions were recorded. That is up 62% versus January 2025, while the markets were already jittery from the tariff announcements. February 2026, 61.4 billion, that's up 20% year on year, it's still growing. And March 2026, 43 billion dirham. This is where it gets interesting. And I'll be honest with you about what this number means in a moment. The total Q1 2026 is 251 billion dirham across 61,500 transactions. That is a growth of 28.5% year on year. Now here are the structural reasons why this market behaves differently to equities. First, the dirham is pegged to the US dollar. In a risk-off environment where investors flee to dollar assets, your Dubai property does not lose currency value. That is a structural advantage most markets do not have. Second, there is zero capital gains tax, zero income tax on rental income. So if you're sitting on a Dubai property that's generating 6 to 7% gross yield, you keep the whole 6 to 7%. In London or Paris, the taxman takes a significant portion of that. The net yield difference is substantial. Now third, this is a hard asset. It doesn't drop 5% because of a tweet. The psychological stability has real monetary value when everything around you is flashing red. Now here's where I'm gonna give you an honest picture, because I think that you deserve it more than you deserve a standard sale pitch that every other broker is giving you right now. In March 2026 was the first full month of trading under the shadow of the Iran conflict, and the data shows it. The total transactions dropped around 12.6%. That is real. That is the market reacting to the uncertainty, and it's exactly as you would expect. But here's what the same data shows. If we strip out land transactions and look at residential only, March X land transaction value was actually 1% higher than March last year. The headline number looks worse than the underlying reality. And the ultra luxury segment, properties above 10 million dirham, they haven't flinched one bit. 990 transactions above 10 million dirham in January 2026 alone. The high net worth buyers, the one with genuine capital to deploy, they're still buying through all of this. And this is actually the pattern that Dubai has shown every single time there has been a shock. COVID 2020, the market dipped, then went on to 5 consecutive record years. The regional conflict in 2024, transaction volumes held, the market bends, it doesn't break. Is it completely immune to global shocks? No. Is it more structurally resilient than a NASDAQ portfolio right now? The data says yes. Let me put this simply so you can make your own decision. Global equities right now, they're high volatility, daily liquidity, exposed to tariff risk. No income, no tax shelter. Gold, the store of value. There is no yield, no income, and no utility. Dubai property, 6 to 7% rental yield, tax-free, dollar pegged, hard asset, proven resilience track record, and you can actually live in it or rent it out while you wait. For a medium to long-term investor, 3 to 5 years minimum, Dubai property as part of a diversified portfolio makes a compelling case right now. Not your entire net worth, not on leverage you can't service, but as a hard income generating asset while the world figures itself out. There are very few places globally that offer this combination at this price point. Now, the data that I've shown you today is from this week. It's from Q1 2026 reports. It's live transaction figures, real market numbers. It's not projections, not speculation. Now, if you want to talk through what this actually means for your specific situation, your budget, your timeline, and what you're actually trying to achieve, fill out the form in the description below. I'll get back to you directly and we can have a chat. If this was useful, please like the video and subscribe. It genuinely does help me keep making content like this. And as always, I'll see you on the next one.